Hello everyone. In this video, I'm going to share one of the most popular indicators, MACD, and how I use it in my investing journey. In this video, I will be sharing the basic of MACD, how to identify if a trend is sustainable with MACD, how to spot a potential trend reversal with MACD. This is rare, but once this happens, it is a very powerful signal to signify reversal. Please remember to watch until the end. At last, I will also share the limitation of MACD and the common mistake that we should avoid from. Part 1. The basic of MACD. While most of the investor or trader knows about MACD, but do you know the full name of this indicator and why it named so? Initially, I thought MACD is McDonald. Well, MACD is Moving Average Convergent Divergent, MACD. Now, let me break the MACD part by part. This is a MACD chart extracted from my favorite stock, Microsoft. I will make it simple to understand. First, do you see this zero horizontal line? When the two lines are above zero, we call it bullish or outward momentum. If the two lines are below zero, then we call it bearish or downward momentum. Next, do you see these two lines with different colors? If we look on the parameter setting of MACD, there are three parameters or exponential moving average here. Short, 12 means the shorter term EMA used is 12. Long, 26 means the longer term EMA used is 26. Then MACD equal to 12 period EMA minus 26 period EMA, which is the orange line here. Let's call it MACD line. M9 is EMA 9 used as a signal line, which is the blue line. Thus, when the MACD line, orange line, is crossing above the signal line, blue line, it is an indication of bullish momentum. It is also indicated by the bullish histogram. In contrast, when the MACD line, orange, is crossing below the signal line, blue line, it is an indication of bearish momentum. It is also indicated by the bearish histogram. Let's make a summary here. Bullish indication. Two lines are above the zero level. Orange line is crossing above the blue line. Bearish indication. Two lines are below the zero level. Orange line is crossing below the blue line. Next, let us combine them. And there are four possible scenarios. First scenario, orange line is crossing above the blue line. Both lines are above zero level. Both are bullish indications. The MACD is displaying convergence. This is translated to good momentum on the price movement. The bullish trend is intact. Second scenario, orange line is crossing below the blue line. Both lines are below zero level. Both are bearish indications. The MACD is displaying convergence. This is translated to good momentum on the price movement. The bearish trend is intact. Third scenario, orange line is crossing above the blue line. Bullish indication. Both lines are below zero level. Bearish indication. This is perceived as divergent. Fourth scenario, orange line is crossing below the blue line, bearish indication. Both lines are above zero level, bullish indication. This is perceived as divergent. For the third and fourth scenarios, when the MACD is displaying divergence, the price movement is likely sideways or no momentum. From here, hopefully, you get to understand why MACD is called Moving Average Convergent Divergent, as we are measuring the convergent and divergent of the EMA 12, EMA 26, and EMA 9. Okay, once we understand the basic of the MACD, it will be very easy to understand how we can use MACD to identify a trend or even the momentum of a trend. Part 2. How to identify if a trend is sustainable with MACD. Let us go back to my favorite Microsoft again. In general, we can notice that when a trend is in the conversion mode, the trend is in momentum and more likely to continue. For example, during the June, July, and October, November period, MACD is showing bullish conversion. Thus, the uptrend is intact. In addition, during January to February period, we can see that the MACD is in bearish conversion, and this already signals us a potential sell-off. In contrast, when MACD is showing divergence, the market tends to move sideways, such as during July to October or November to Jan. And yet, identify a trend with MACD is really easy and straightforward. Part 3. How to spot a potential trend reversal with MACD? We can spot potential trend reversal through price MACD divergence. For example, when the price of a stock is making higher high, but the MACD is making lower high, it is an indication of weakening bullish momentum. We call this scenario bearish divergence. Snap is a good example for this. This is a Snap weekly chart. While the stock is making higher high, but MACD is showing a lower high. This is a warning signal to me. After that, the stock plunge. Similarly, for Unity, can you spot the price MACD divergence here? Indeed, I saw my Unity share at $193 when I saw this bearish convergence pattern, and yet I managed to run away before the plunge. Another scenario is when the price of a stock is making lower lows, but the MACD is making higher lows. This is an indication of weakening bearish momentum. This is a McDonald's weekly chart. We can see that from May to November, the price was making a lower low, but the MACD was making a higher low. This is an indication of bullish divergence. Thereafter, the stock rally. Please note that these two patterns are not easily spotted and they are rare. However, if you manage to spot them, do not ignore them. Lastly, I will be quickly talking about the limitation of MACD. Similar to moving average, MACD is a lagging indicator. Thus, the MACD is a trend following indicator. This means that the signals will occur when the trend has already came into existence. Other methods may be more useful to recognize an upcoming trend. Next, it works best when a market is trending rather than consolidating. Thus, when MACD is in divergent mode, we will need to combine with other indicators to confirm a trend reversal. For example, for current Nasdaq Composite Index, the MACD is now at the divergent mode. We can only say that the current momentum of sell-off is slower. However, whether it will converge to bullish trend or bearish trend again, we are not able to conclude at all. In my opinion, it needs to move into the bullish convergence and break the key resistance of 13,900 to form a double bottom pattern. When the short-term EMA is also swooping out, then I will be more confident to say that the market has shown a clearer reversal sign. That's why the previous example of price MACD divergence, we need additional indicator of price movement to anticipate the price reversal. Okay, that is all I would like to share about MACD. Hopefully, you gain some insight from my sharing. Next time, I shall share about how to use MACD to time our entry. It will be a totally different story and strategy. Please subscribe my YouTube channel and give me a like on this video before you go to motivate me more. Thank you and see you in the next video.